cross into the 30-plus day mark on the Russian invasion of Ukraine. Was that the dominating story last week?
Well, it continued to be, but, in the markets, as we like to say, we've had one heck of a rally. And think about it, when the war started, of course, Derek had said maybe a month ago when the bullets start flying, you should probably start buying. And a whole lot of people did that. The S&P is up 10%. And the triple Qs, which is a proxy for the NASDAQ, is up 13% off those lows in just the last couple of weeks. So we've had a really nice rally since that has happened, and it's been wide. Most of the companies, Danny, have been participating, 90% of the stocks participating. So we don't really have an all clear from where we were, obviously, because there's so many things in front of us. Obviously, we know about the war. We know about the Federal Reserve, especially the problems that they have in front of them. But think about where we were 2 years ago. This was the bottom from the COVID bottom 2 years ago, Danny, from today.
And then after that, actually 2020 wound up having a pretty good year, right?
It did.
S&P was what, high 20s?
It
Something
did.
like that.
So it rallied significantly. In fact, we're up 100% from those lows in March of 2020 to where we are today. So, that's the S&P 500 up 100%. So it has rallied significantly. If you were buying the S&P 500, the index, you've made a whole lot of money since the bottom of that thing. And so that's the things that we look at. And people want to go, well, how could that happen? Well, obviously there was a huge downturn. We all know about that. Here's the key. $1 trillion, Danny, of inflows into the equity markets since the bottom. So you go, where did that money come from? It came off the sideline. It came from corporations. It came from people's income statements, for example. And then, of course, people put money back into the market. So $1 trillion of inflows certainly will make the market rally. And you think about what's the alternative. Remember you talked about
Tina,
my Italian cousin, right? Tina, T-I-N-A. There is no alternative. And so there's so many things that have gone into that. So the market can be overbought, but it may not be over-owned. And that's something that we're looking at right now. There's still money coming into the markets as we speak.
Is traditional thinking, Dave, that because we've got such a global economy, that things in Europe, things in Ukraine and Russia really do affect over here? Because, Coca-Cola, a multinational company.
Well, for sure. Because if you think about supply chains, you think about companies that are based here, Coca-Cola, McDonald's.
Yep.
If they get 8 to 10% of their revenue from Russia, for example, that's going to hurt their balance sheets. And of course, they're exporters, not only energy, but commodities, wheat coming out of Ukraine, all of those things. And then, of course, you look at what's happening with oil. And on Friday afternoon, I was looking at jet fuel, the cost of jet fuel, which has tripled. And just at that same time, Frontier and Spirit announced a merger. And so there's no question that right now the people are trying to figure out, corporations are sitting around a boardroom and saying, what is the best way to be accretive in this environment? And you have to try to find companies that have pricing power. In other words, if your input costs, your commodity prices are going up, can you pass those along? And there are some companies who are able to do that.
There sure are. In fact, people would think, companies are not doing well right now, but they do. They've got the pricing power,
right.
And they're doing okay.
Right. So fertilizers, agricultures, chemical companies, for example, are doing that. And then the other side, you have to look at who's going to be put under pressure with a Federal Reserve tightening, and that, of course, could be big banks. And so we're starting to watch that because an inversion of the yield curve, as we've covered before, has been a harbinger for tough times ahead.